Everyone's talking about stocks, but what we have to talk about is commodities. They are moving. Specifically, what commodities are moving and which ones are at new lifetime highs and which ones are looking to break up and out past major resistance. So let's dig into this and let's see exactly what's going on. Stick around. Hey everybody, this is RC Peck, and I want to talk to you about commodities. Now, specifically, I want to talk about natural gas, I want to talk about copper, and I want to talk about agriculture as a group or a subgroup of commodities, because what's going on with them is really interesting. And you know what? Let's throw in coal too through a specific stock, because I want to show you what can happen. So let me jump over to the price charts and let me show you what I'm looking at. Now on the screen here is copper. Let me actually zoom out. 469, actually I don't need to zoom out. 469, if you can see, look at the screen, right where my blue lines are, that's the old lifetime high from 2011. So that's copper's old lifetime high from 2011. And right now copper is consolidating below those old lifetime highs. If copper breaks above 469, okay, and I'm looking at an index of copper. So this is, copper's priced in US dollars from this chart. But 469 breaks out with strength. Copper has way, way farther move because it's gonna be lifetime highs. And just look what it's done since the bottom of the COVID, $2.10 right now up to $4.40. So it's done a double. Not a big deal when it comes to stocks, but when it comes to commodities, that's a huge move. So the first is watch copper over 469. It's absolutely buy. Right now, it's not a buy. Anything under that 469, consolidation under a lifetime high is not strong. It's actually weak. But if we start getting a consolidation above that 469, then something interesting is happening. Okay, so that was one. The other one I wanted to show you was natural gas. Now, this is a tracking symbol of natural gas, UNG. And I'll tell you why I like this. First of all, no one's talking about natural gas at all. Now, it's a tracking symbol, but this is what I like about it here. There's this huge resistance at 1450. Meaning, when I talk about resistance, what I mean is sellers are coming in at that price and they're selling their shares of UNG. Now I can let's just look at Nat Gas, the actual index of it, and it looks quite different because this is not a tracking symbol. This is actually natural gas. So this talks about how sometimes a tracking symbol just doesn't track that well. But we're buying UNG, and so we want to know what's going on with UNG specifically. And if this can break above, let's get really clear here, 1453, this thing can really move. And if it's breaking above 1453 on this chart, we know that the actual Nat Gas chart is moving higher. So Nat Gas is something that right now is just really staying under that ceiling of 14. We'll call it 1450 for easy math. Now this same setup here, I want to show you a coal stock that had the same setup here, and it just could not break above. In this case, this is Peabody Energy, and it just could not break above $4.90. You can kind of see that. You could give it a range here and just see that it could not get above it. And finally, it did break above it. So just notice when it broke above it, it zoomed higher and then came right back down to the breakout. And, you know, it's moved 150%. Not bad. 150%. Think about this. The S&P does an average of 9 to 10% a year over a very long period. So 150% is 15 years of return. And in this case, it did it in about 3 months. So now that's BTU. It's a small company. You can see it's been down and out. It was below $1, but it is a commodity stock. And there was a resistance here. So when that resistance is broken, crazy stuff can happen. So that's UNG. You could even go and just type into Google natural gas stocks, and you could start to see which ones look good and don't look good. But as far as the commodity goes, this is the United States Natural Gas Fund. And it's got that resistance there that if it can break, there's something going on there. The other thing I want to show you in commodities is just agriculture. Now, this is the Invesco DB Agriculture Fund, and it's got the same type of resistance that we saw in Peabody, which is BTU, that we saw in UNG, though the UNG was stretched out. But we're looking at something very similar, a lot of resistance. We have resistance in agriculture, and you can see they're right there. And even if we put in an agriculture stock like Deere, you can see how deer kind of has this same resistance right here. And now deer is right back up to that kind of that resistance point. And so we're seeing deer had a pretty good correction of 17% is not that big a deal. But as far as with the actual commodity stocks, we've got some interesting things happen. Now look, 1932, I got a squint here. 1932 definitely becomes buy over 1932, and this thing can move. If you jump into some of the individual commodities, like here's corn right here, it's looking very copper-like. It's doing the consolidation here, and these are tracking symbols, not the actual underlying. Here's wheat itself, WEAT, that has just broken out. Again, these are tracking symbols, but what you're seeing is agriculture is starting to break out. No one's talking about agriculture. People aren't talking about commodities. Here's DBC, which is kind of the S&P 500 for commodities. I've talked about this symbol before, and it's just kind of going sideways here. Nothing too crazy happening. It's just going sideways. Sometimes the lows are higher. This low was lower. This low is higher. Maybe kind of that. I mean, this high is slightly higher. Commodities are still strong from the beginning of the year. Let's just get a general kind of gut on what commodities have done. Commodities from a DBC are up 30%. The S&P is up about 20%. So commodities are beating the S&P, and the S&P has been beating almost everything this year. Commodities are beating it about 50%. So that's what we got. I see commodities moving higher, specifically agriculture is looking good. Natural gas, if it breaks that price, it can really move higher. Hey guys, let me know what you think. Let me know where you think I got it right, where I got it wrong. And if you like this video, please click the like button, leave a comment, and let me know what you're thinking. I reply to all comments. And also, if you like this, you're going to love our free training, Clarity and Control, which you can check it out in the description. All right, guys, thanks for being in my world, and I will see you on the next video. Okay, bye.